Luvuyo gave his life to work beneath the ground. Years of hard work, sacrifice, all for a future he hoped would be easier. When the work was done, he went back home with only what he thought he had. But what he didn't know is that something was left behind, a benefit with his name on it. Until one day, a call came through. ICTS Tracing Services had found him and found what was his. Because what you're owed should never be forgotten. Now Luvuyo's dignity is restored. His story complete. ICTS Tracing Services, the benefit you never knew about.
Ladies and gentlemen, welcome to this episode of an Exec meet and greet here on EBnet.Stream. Today I'm joined by a fund manager or investment manager, but an investment manager with a twist. This person co-founded a company called Effectus Capital Management. His name is Aviraag Ramdhani, and he'll be sharing with us his journey to the point that he is at today. Aviraag, welcome and thanks for joining us.
Yeah, thank you, Leon, for having me today.
Yeah, am I correct in saying that you co-founded Effectus?
That's right, Leon. I was one of 4 co-founders of Effectus Capital Management in 2015.
You're a young guy. 2015 is 10 years ago. How old were you at the time when you did it?
I was 32 years old.
Yeah. So that was a big decision. Did you come out of corporate before you founded Effectus?
I did. So if I can go into my background, so I actually grew up in KwaZulu-Natal, matriculated at Durban High School, all right? And during my matric year, I had to decide in terms of which degree I wanted to pursue when I had finished matric. And I did pretty well at the quantitative subjects at school, so maths, accounting, physics. I did pretty well, and I was advised by a few people that I should consider actuarial science or pursuing the path to become a chartered accountant. And I was lucky, and my first choice was actuarial science, and I did get into actuarial science at University of KwaZulu-Natal back in 2002. So I did my first year at UKZN, but at the end of my first year, I decided for a few reasons to actually relocate from KwaZulu-Natal to Johannesburg, and I joined Wits University, and I completed my actuarial science degree at Wits.
So can I, if you don't mind, sorry for interrupting, can I just check with you, that change, was it more for personal reasons, or was there something that you saw within Wits that you thought, I'd rather go study there, or were you thinking about, jobs being in Gauteng, that kind of thing?
Yeah, that's a good question, Leon. It was related to my goal. So I wanted to qualify as an actuary as quickly as possible. So back then, there were 15 board exams that you had to pass to become a qualified actuary. And back in 2002, every university during the undergraduate and postgraduate degrees for actuarial science had a certain number of courses that you would do throughout your degree, where if you attained above a certain mark, usually it was 65%, then you would be exempt from writing that board exam towards qualifying as an actuary. But UKZN at that time, I don't want to specifically single out UKZN, but at that point in time, they only had 3 exemptions that you could possibly get from studying at UKZN, whereas Wits had up to 11 exemptions at the time. So because I wanted to find the quickest way to qualify as an actuary in the shortest amount of time, I chose to move to Wits.
Does Wits actually does it stand out in that sense from an actuarial science perspective, or is it similar with Stellenbosch or others in terms of the level of exemptions?
Yeah, Wits, UCT, Stellenbosch, and Pretoria. Those are the 4 universities that have the highest amount of exemptions.
So as much as 11 of the 15 you get as an exemption.
Yeah, if you get over 65% for those exams, you will be exempted from writing those board
And then
exams.
you have to do the additional 4, and then you would be qualified as an actuary. Is that correct?
That's correct. Yeah.
I didn't realize it was that easy.
Yeah. Look, it didn't actually pan out the way I wanted it to, but that was the goal I had in mind.
Okay, so take us on the journey then. So you moved to Joburg, you were studying at Wits. Why did it not pan out as you wanted it to?
I didn't get as many exemptions as I wanted, so I didn't get the 11 exemptions. I got about 5 or 6 exemptions at the time. And after my undergrad, I then was fortunate to land an opportunity at Momentum. And I was in their actuarial team for the investment products. So I spent about 1.5 years at Momentum, mainly involved on the pricing side. Very quantitative role, but I learned a lot, during that 1.5 years.
Mm-hmm.
But after being there for that amount of time, I realized that I didn't want to pursue specifically just a quantitative career path, right? I wanted to be exposed to all the other elements and facets of business, right? And I started applying to the banking industry. And I landed a role at Standard Bank at the start of 2008, actually in the personal and business banking division. Specifically, the product house that I joined was home loans. But I always had the goal of getting into the investment banking industry. So it was my first step to get into investment banking, was getting into a bank. And after spending about 1.5 years in the home loans division at Standard Bank, I then got an opportunity to join Standard Bank CIB. So then I joined Standard Bank CIB. And
so sorry, just to slow you down there, can you unpack for our audience what exactly investment banking is?
Sure, I can certainly do that. So banks are split into basically 3 to 4 core components in terms of how they separate their divisions depending on the type of clients they are servicing, right? Mm-hmm. So you and me or any sort of person that needs banking services as an individual will fall under the retail banking segment of the bank, right? Mm-hmm. Then we have small to medium-sized enterprises, and that falls within the business banking segment of the bank. And then you have your larger businesses and listed companies, and they fall into the corporate and investment part of the bank, right?
And that part, sorry, finish with the fourth one, and then I'll come back to it.
Yeah, then the fourth segment is sort of asset management, wealth management, and insurance, right?
Okay. So that corporate investment banking, I mean, you're not only just having a bank account with the customer, but you're doing loans and you're helping them effectively grow their business, I'm assuming.
Yeah, so within the investment banking division, it's then segmented according to product houses as well. So like you said, you get your, they actually call it the investment banking division, funny enough, in an investment bank. So that's the division that provides, like you said, structured loans and other financing products to businesses, right? Mm-hmm. And then you have the global markets segment or division within investment banking, and that's where you offer traded products to customers. So equities, products, fixed income, currency, and commodities.
Yeah.
And then the last component of investment banking is corporate and transactional banking, where you offer transactional account services to client base.
So it was your interest in business that got you wanting to head in that direction, because you wanted to work with businesses and get to understand different businesses and support their growth. Was that part of your motivation?
100%. Yeah, it was exactly what you said, and also it was my desire to have client engagement as well. Right. So I want to engage with businesses. I want to engage with them on a client level, have discussions with them, understand their businesses, understand their, what they require, and help to craft a solution for those clients as well.
Yeah. So you now at Standard Bank, you've moved in that direction. You've got you're targeting something, and then how did that develop from that point?
Yeah, so I started within the risk management division of Standard Bank, which actually was a great learning ground, Because what we did on a daily basis is we went out to clients together with the deal makers within the bank. And we would have discussions with clients. We would understand their businesses, understand their needs. We then come back and we put together a motivation of this is the company and this is all about them, but this is what they require and this is the implications of what they require. So we would do similar to what you do in asset management, where you do a report on a company. It was very identical in the investment bank. You put a full report together with all of the risks highlighted and mitigations, and you do a cash flow forecast, and you forecast the performance of the business over the next 5 years and whether it's actually a business that can sustain the products that they have requested from the bank, whatever financing or any other derivative structures they wanted to source from the bank. It actually formed a great learning ground for me in terms of fundamental analysis. It taught me a great amount when it comes to that type of work.
Was there a reason that you preferred to be on the investment banking side and not actually go to the asset management side, or was it just how it was panning out?
It was more how it was panning out. I mean, but at the same time, so there's quite a few sort of events happening in parallel. So while I was at the investment bank and in that role, at the same time, I was investing in my personal capacity. Right? I was investing mainly in the local stock market. And I had a good understanding of the market and all the companies that are listed in the market. But at the same time, I was getting or developing my skills in fundamental analysis, which was helping me on my personal investing because I understood companies a lot better and their future prospects. So there was a clear sort of crossover between what I was doing in my day job and actually helping me become better at investing.
I find that interesting because I'll be honest with you, my whole life, I always thought that I was never sufficiently skilled to be able to invest myself in the market. It's only more recently where I've started realizing, okay, well, maybe it's not as, difficult as what everyone might make it out to be. But how much analysis would you have done yourself in your personal capacity? I mean, I see it with my son and his Easy Equities account. I mean, he actually does some research, but he's researching a subset of the market. He's never researching the entire market. Did you almost apply yourself to look at everything out there and invest, or were you also similar to my son, sort of what interests you and dabbling, if I could put it that way?
Yeah, look, I didn't research the whole market, that's for sure. I would look at stocks that were performing well for a sustained period of time, and then actually say, okay, these have been doing well for many years. Let me have a deeper look. Let me understand the numbers and the valuation metrics, understand the risks and opportunities with the business, and then based on that, I would be able to make a call in terms of whether I think it's a suitable long-term investment or not.
So isn't it amazing that even as a young person doing it for themselves, you still defined almost a philosophy and process that you followed to get to the actual investment? It was a natural thing.
Yes, you're right. I mean, you look back, that's exactly what I was doing. And actually, there's another component which we'll talk about just now, but what I did in those early years in my personal capacity became the foundation of my thesis that I did in my MBA as well,
Okay.
which we
will tell us about the MBA.
Yeah, so towards the end of my Standard Bank tenure, I had ambitions because I had been investing in my personal capacity. There were people in my network that were doing the same thing, and I had a goal of, while I had spent maybe just under 10 years in the corporate world, I did have ambitions of becoming an entrepreneur, right? And it was recommended to me that you should pursue an MBA because it might give you more insights and a broader network to decide whether you actually want to become an entrepreneur or not. And so I started my MBA in 2012, also at Wits Business School, and it was a great experience. I mean, besides the sort of academic side of it, met a lot of great people, a lot of inspirational people, and broadened my network substantially, and grew as an individual as well. And like I said, in your second year of the MBA, you had to do a thesis, right? And because I had these plans of becoming an entrepreneur and actually launching an asset manager, the topic of my thesis was the merits of momentum and value investing, right? So I basically, back tested over 25 years in the JSE, a portfolio that's based on value investing techniques versus a portfolio based on momentum investing. And I ran the analysis and did all of the sort of write-up on its performance over the 25 years. Yeah.
So
And
what
that
was
also,
the outcome?
the outcome is that in the JSE, certainly up until that time, which was till the end of sort of 2013, I think it still holds true today, that momentum investing outperforms value investing over the long term. Yeah.
Yeah, interesting. So everyone says MBA is so tough to do while you're busy working, high suicide rates. I've heard things like that. Is it that difficult in terms of the quantum of work and to do that? Because most people do their MBA while they're in someone's employ.
It is tough, and it does take a bit of adjusting to. I was doing the weekday classes, which is every Tuesday and Thursday after work at about 5:30. You'd have to go for lectures till 8:30, and then almost every single weekend you would have to come into university because you put into syndicates of about 10 people each, where you'd have projects and assignments that you had to work on. So it probably was consuming about at least 10 to 15 hours a week of my time to dedicate to the MBA. But they tell you from the beginning, as soon as you start the MBA, they say it's all about time management and self-management. You've got to start giving up some of the other luxuries that you enjoyed while you were working and weren't really doing anything else to find the time to dedicate to the MBA. And so the initial adjustment does take, I would say maybe 6 weeks or to 8 weeks to get used to it. But once you're in the rhythm, then it's okay.
So it's like anything like, but it is a sacrifice. I mean, you literally do have to adjust your life to fit something extra like that into it. There's no ways you can just sort of lump it on top of everything.
Yeah, you got to find those 15 hours a week. And I think at that time I was engaged. I wasn't married, but I didn't have kids. So if you're married and you have kids and then you're doing the MBA, then I can imagine it's going to create a lot of pressure for you and just your family because of the amount of time it's going to take.
So look, I mean, an MBA, I think, is a fantastic qualification or a fantastic experience for anybody that's wanting to ultimately run a business or lead a business, if I could put it that way. And it's amazing that every single person you talk to always talks about the network that they've created. There's an element of that stress that you go through. You create certain bonds with people around you. And that network continues forever. Everyone checks in with each other and is continuously sharing. So is that been your experience as well?
It has. And when I first started it, I didn't realize the value of that network and the friendships that you would build that will last, into the future, basically into perpetuity. So that's been my experience, and I still keep in touch with all of my classmates and colleagues from the MBA.
So I was lucky enough to be sent to Harvard Business School to do what they call the Exec MBA thing, or AMP, and to this day the WhatsApp group remains. And I can tell you some of the debate that happens, like right now the guys are debating AI and whether AI is healthy or not. There's no ways I'd ever have had that level of fruitfulness of discussion. Okay, you can't get that from just reading an article. But yeah, everyone's actually contributing and discussing, and sometimes guys are getting upset with each other, but you can see the building of the thought, and I think that's invaluable to have a network like that.
Yeah, exactly. That's similar to my experience, and like you said, till this day, there's always discussions on opportunities or topical items like AI. Individuals who are wanting to pursue business opportunities, become entrepreneurs, they reach out to their network, they get advice, they look for other people to join them. So it's very useful. And it's not just your colleagues. I mean, it's the lecturers. You get other individuals that come in who for a couple of days that'll give you their insights on a specific topic or industry or company. You can connect with them. So it's really it's a broad network that you do build over time.
Okay, so you've been quite focused. I get the sense of focus from you. You knew the direction you wanted to go in. You were flexible to a degree, but you were quite determined in terms of that direction, and it was always ultimately to having your own business. So now you sit, and I know there's other parts to fill in, but I'm quite keen to get to the decision making that went through your mind, which is a lot of bravery, okay, to say, right, I'm going to go on my own effectively, or your own, you had partners, but it's still pretty much on your own, because starting up any business is risky. So take me there. I mean, take me. I mean, obviously, entrepreneurism is in your blood. You can see it. It's natural for you. It's not always natural for everyone, but it is a big decision to make. So, what was it that drove you to that, to be willing to or wanting to take on that risk?
Yeah, there were a couple of factors. I mean, the first is that I had three other co-founders that were also very passionate about investing and also passionate about entrepreneurship, right? And one of them was actually my father-in-law, right? He'd been investing in his personal capacity in markets locally and globally for 25 years at that point in time. And so we shared a common interest when it came to markets and investing. And he also pushed me to say, well, let's go set up an asset manager because we can express all of these techniques we've learned over so many years, and build out some great products for investors. And I was fortunate that he had some capital and he said, listen, I will put some capital into your business so that we can sustain ourselves and get us to a point of where the business can wash itself. So I think while we had a high conviction in terms of starting the business, we were fortunate that we had a backer financially in the business to help us, and then a supportive family environment. My wife had a job and she was working, and at that time, my first child had been born. She was born in Feb 2015, and we started the business in August 2015. So it was a time where, depending on the household you're in and your personal circumstances, some people may view it as very risky, where you're getting a husband or a wife that's starting a business and being an entrepreneur when you just have your first child, right? So my wife was very supportive, and that certainly helps when your partner backs you and understands the risk you're taking, but as shares your vision and passion for what you're doing.
EBnet is proud to bring you top quality content from experts across the financial services industry in South Africa and internationally, all for free. Your support helps us in doing this. All we ask is that you subscribe to our channel by clicking the subscribe button below, share this video with others you think will benefit from it, and give us a thumbs up if you are enjoying the content. That way, you help us help you. Thank you from the team at EBnet. For more great content, please visit www.ebnet.co.za. But I think also what's good to share with the audience is being entrepreneurial doesn't mean you have to do it all on your own. In fact, it's sometimes really difficult and lonely to do it in that way. So you weighed up basically the risks. You had certain risk mitigators that were important to you to give you the guts to go about doing it. So now that you are 10 years down the line, all it cracks up to be?
Yeah, that's a great question. Look, when you become an entrepreneur for the first time, you don't realize the gravity of what you're getting into. And besides the personal growth that you have to go through, I mean, I went through a tremendous amount of growth, not just technically, but as an individual, in terms of building resilience, building your character, perseverance, energy, drive, all of that takes a while to build up and get to a point where you can actually have thick enough skin to deal with the ups and downs in business. So yeah, to answer your question directly, no, it's not some glorious thing to be an entrepreneur and start a business. It is literally blood, sweat, and tears. It's a lot of hard work, it's a lot of effort. A lot of people think that if you a co-founder of a business, it's so great because you're one of the bosses. You can work your own times. If you need to do something and get away for a couple of hours, there's no one to check in with. You can do that, and you've got this great level of flexibility. But that's not the case. I've worked harder in the last 11 years than I've worked in my entire life.
Yeah.
Right? The hours are longer. The stress levels are higher. You don't really have weekends anymore. I mean, most weekends I'm working, not the entire weekend, but I'm working for a portion of the weekend. The evenings you're working, so in order for your business to succeed, you need to put in a massive amount of effort. And it is very difficult. Let me put it that way.
Well, you become I mean, this whole fallacy of the fact that you got all the freedom now and so on, you become your own slave at the end of the day. I mean, like you're having to put in all the extra hours yourself. You're having to do things that perhaps you wouldn't have had to have done in a more corporatized environment. I remember when I left corporate, I had to go on a trip to Cape Town. Normally my trips were just booked for me. I would get given the tickets and all. I would go off to the airport, climb on the plane, check my ticket. Oh, that's the hotel, and all done. This time I remember the day before I left thinking, oh, I haven't booked a hotel. So, oh, geez, okay, well, how am I going to do that now? So I quickly went on to booking.com and I did it while I was driving, and I only realized later that night that I booked myself into a youth hostel by mistake because I just looked at the picture and that's what it was, kind of thing. So there are definitely other skills that you need to learn, but the difference is you almost become like a high-powered vehicle where the passion and the vision that you had is the fuel that keeps you going. So those extra hours, while it's effort, it's good effort, if I could put it that way. I don't know if that's how you feel about it. It's like you want to put in those extra hours because it's all about the goal of where you're going. It's living that vision.
Absolutely. Yeah. I mean, every day you are fueled by that vision and passion. It is absolutely rewarding. Like I have said, it's difficult, but it's 100% rewarding. And so some of the keys to, I mean, as you develop and grow as a person is that initially the highs are very high and the lows are very low. But over time, you start to, learn how to deal with the highs and the lows and to normalize it and stay focused. Like if you listen to some of the great entrepreneurs over the last, couple of decades, they talk about signal and noise, right? So are you able to focus on the signal? So what you need to get done every day, spend most of your time doing that and spend a very small part of your day focusing on the noise. And you get better at that, the more and more, as the years go by.
But there's another concept, circle of concern, circle of influence. You learn very quickly that your circle of concern it's just concern. I mean, you've got to focus on where you've got the influence. Otherwise, you'll just chase your tail the whole time and be no good at where you can actually make a difference. So I think it focuses the mind in that sense very quickly. But now you have innovated and created an asset management industry in what is one of the most lucrative industries, as I see it, but it's also one of the most concentrated industries in South Africa. I always refer to the oligopoly, both in terms of the gatekeepers as well as ultimately the guys that are managing the money, because it's sitting in few hands, lots of money in few hands. So the barriers to entry are high. So how do you see that? I mean, when you look at it now, you say, well, how do you actually break into that world? Or is your vision to say, well, we don't actually want to break into that world. We want to, exist differently.
Yeah, you're quite right. I mean, it is difficult when you're competing and there's, a handful of managers that are dominating 80% of the market, right? But it is an opportunity, right? And we're seeing that change over time. It's changing slowly, but it has been happening, whereby you're getting managers that had started their business 10, 15, 20 years ago, that now have a long track record, that had differentiated products, that are coming to market both in the institutional and retail space to offer something different than, the guys that have been around for 40, 50 years or so. So we certainly want to go in that direction. We understand that, and there's a saying that most entrepreneurs overestimate what they can achieve in the short term, so in the next 2-3 years, and they actually underestimate what they can achieve over the longer term. So the reality, it's a long-term game. It's not like the tech industry or AI, where in the space of a year you've got a billion-dollar business. It's going to take time and it's going to take focus to be able to get to a stage where you can compete actively against the bigger asset managers out there. But we've seen it. I mean, if you look at the conversations that we specifically right now focusing on the institutional space, if you look at the conversations trustees are having around manager selection and what they're looking for in terms of products from asset managers, we can see that the demand is changing and the types of conversations they're having is changing as well.
I always say to everyone, it's one of the few industries where you don't need to only persuade people to hire you, but in effect, you got to persuade them to fire someone else. in order for them to hire you. So it's a bit of a double whammy in what's the right word, in decision making, and therefore it takes long as well to gather and to grow a book of assets for an asset management business. So you've got to have that patience.
Yes, and exactly. And initially, you have these lofty targets and a very short timeline to achieve them. But as the years go on, you become more humble and you realize that this industry is different, and it takes quite a bit of time.
So there's to remain nameless, but a company that I've been assisting to set up an asset management capability off the back of already success in other fields. And they've put together the most magnificent models, over the next 1, 2, 3, all the way up to 10 years down the line. And they've presented it, and it's all very reasonable stuff, and it all makes a lot of sense. And my closing ambit in discussion with them was that everything that you got there is fantastic, and there's only one thing I can guarantee is your actual ride is not going to look anything like that whatsoever. That's for sure. I've never ever seen it pan out so perfectly over time. So be ready for the bumpy ride. That's just part of the, I suppose, of the enjoyment of it all.
Yeah, exactly. You have to manage your expectations, which I didn't do very well initially, but I got better at it over time. And if you keep on plugging away and you keep on focusing on making sure that on the investment side, you're delivering good returns and building a good track record, and you keep on knocking on doors and building relationships, then eventually, yes, you will succeed.
100%. So now you guys, I'd actually like to just give you a minute or two just to speak to the audience about who is Effectus and what you do differently, because in my mind, you're not a traditional asset management business. You do things differently in that sense, in terms of what you offer, the kind of products. So just give us a quick overview of the business.
Yeah, sure. I mean, ultimately, the vision of the business is really to empower South Africans by building their wealth over time. It sounds generic, but that's what we're doing, because if you look at the average man on the street that has a job that's saving every month towards his pension, he does not understand the full opportunity set that's available globally. He might know a few companies in South Africa. He knows ShopRite and Pick n Pay and Foschini because he can identify with those companies. But is he aware of all of the new emerging industries happening, that's occurring globally? Not really. So we want to provide a conduit for those types of individuals to invest their money into these massive growth opportunities, mainly offshore and certainly to a certain extent locally in South Africa. There are some of those opportunities, but more than 90% of them are offshore. And by doing that, when that person is nearing retirement, they actually have a lump sum whereby when they retire, they'll be able to maintain their standard of life. Where right now we only have 1 in 10 people that actually can maintain their standard of living when they retire. It's a huge problem, where pensioners just, the lifestyle just gets eroded over time. So that's the overall vision, and we've created a product set where we can deliver on that. We've got a fund that we call the South African Growth and Innovation Fund, and we've got a global one called the Global Growth and Innovation Fund. And what it seeks to do is really find innovative, disruptive companies in the industries locally and globally that are creating longer term moats in their business that is going to achieve sustainable outsized growth for investors. And we've got a differentiated investment strategy that, like you said, is different to other asset managers. And we've been targeting institutional clients with this product set over the past, 10 years, and we've gained good traction. I think they understand the value proposition in terms of our philosophy, process, and the companies we're investing into to drive long-term compounding of returns. We also have a South African product that's a protected equity strategy. So that's for investors that are more risk averse. So they don't want to take any sort of risk on the downside, but they want some positive returns into the future. So we have a product set for those types of investors as well. What we do in the business as well, which is critical, outside of just the sort of product set and the client space, is we're very big on the fact that there's a massive talent pool in the country. If I draw an analogy to the Proteas cricket team or the Springboks and also the female version of the Springbok team and the Proteas as well, there's a huge amount of diversity. that's happened over the past 10 to 15 years. There's huge amounts of talent, people of color, doesn't matter what your skin color is, and these teams are succeeding. And we believe it's the same in business and asset management. There's a huge amount of talent out there, but there's a scarcity of opportunity. So we bring in interns every single year. We've done about 15 interns over the past couple of years that have come in to Effectus, have spent 3 to 6 months in the business understanding asset management. And we either retain them and we give them permanent employment, or they go out into the job market and now they've got 6 months of work experience in asset management. And all of our interns have secured employment in the financial services industry. So we'll continue to do that because there's a dire need for it.
And it talks to why it's so important that we also support our SMEs in South Africa. It's incredibly important for job growth and for development of skills and competitiveness, because you all have ways of innovating on programs like that and so on. So it's creating opportunities. So I mean, when you talk about some of those funds and your focus in industries that perhaps aren't well known here in South Africa, it sounds like a fantastic diversification opportunity for any investor to, rather than just have the vanilla old, is to blend it with something ultimately like that. And I'm sure that's where you're picking up a few mandates.
Yes, that is certainly the case. You want your pension fund in this case to have exposure to the complete opportunity set globally. So like you said, it gives you diversification, it gives you access to opportunities and high growth opportunities you don't get typically in South Africa. You get currency diversification as well. So if you're investing offshore, typically the rand will weaken on an annual basis over 5 to 10 years because of the inflation differential. So you're getting currency diversification, and there's a couple of other benefits in terms of it gets more technical around correlations and that sort of thing. So yes, pension funds and investors in general, whether you're an individual or a company, diversification, investing offshore should be a core component of what you do and how you invest.
So you've been through not so much challenges getting to this point, but many decisions that you've had to make where you could have gone one way or another way. It couldn't have always have been easy, and becoming an entrepreneur is never easy because you never know what the end outcome is going to be. So there's a lot of anxiety through that process. However, you mentioned to me that your firstborn was 2015. That means she's now about 11 years old. And you've got more kids now?
I do. I've got 2 girls. So I have a younger daughter that's 9.
Okay, so I'm feeling very concerned because the biggest challenge of your life, okay, coming from someone with a bit of experience now, is going to be teenage girls. Right, so both on the drain on your income, that I can guarantee will happen, but also you're going to have to advise those girls in terms of the choices that they'll make. I've just been through it with my daughter around her subject choices in high school as she goes into grade 10. My son's now finishing grade 12 and he's going into varsity next year. Choice of varsity subjects, all of those kinds of issues, even choice of what car to drive and these things. These are the parenting things you get to go through. And then they just bugger off and they go on with their lives. But when you reflect back and you think to yourself, in a couple of years, you're going to be sitting with your daughters, how do you think you're going to advise them? What is it that you're going to say to them that will perhaps help them in those choices?
Yeah. I always, go back to what you're passionate about. And I know when you're young, it's difficult to answer that question. What are you passionate about? Where do you see yourself in future? So that's the starting point. And then I would look at, how the world is changing. So like, would you pursue necessarily the same, if you want to go to university, would you have chosen the same degree 15 years ago as you would choose today? And I don't think that's the case. I think with the advent of AI and what's happening globally with technology, you have to also think differently in terms of, given the changes that are happening, what types of degrees would suit me well so that I'm in a position of strength in the job market, once I've completed my degree. So right now, if you look at qualifications like, computer science, engineering, those types of qualifications, I think, are still going to stand you in good stead as a youngster, given the revolution we're currently experiencing right now, that's going to change the world forever.
It's so interesting because when I was at that age and having to make those choices and so on, and it was very much driven, good at maths, good at science, pretty much exactly what you went through. So what are your choices? It's actuarial. In fact, when I was choosing, I didn't even know what actuarial was, but it was engineering or accountant or doctor. There you go. If you didn't take biology, forget about doctor. It's not possible. So that's what I was brought up to believe. Now looking at the likes of AI, I'm not quite knowing how all of that's going to pan out, but also the way the system has changed. I spoke to some of the teachers about my daughter taking art. Now, for me, art didn't even count. It didn't count towards your university exemption and so on. Now it does. And now they're recommending things like that in the AI world because creativity is where the human being can still continue to, play a role kind of thing. So it's actually so difficult to make those choices now because there's a lot of uncertainty that AI is bringing to the table. And then the other thing, the 2/3 of all graduates, is that right? 2/3 of all graduates from university are female these days in South Africa, but for engineering, it's still 70% male or 75% male. Computer science is also same sort of levels. So I'm struggling in my head around how to work all of these things out. So what will the future workplace look like? What are the better degrees in order to maximize potential? Where is the passion? Okay, and then what are the subjects that actually lend to that? It all seems to have changed. And the only thing I've learned from this whole process is all the biases that I've got to let go of, because it'll be the worst possible advice I could give to my kids. I need to relearn based on today, not based on when I was in school.
That I agree with. I can identify that with that 100%. I think another important factor to consider is I don't think the job market or careers are going to be what they were, in the past, where you in the same career for 20, 30, 40 years. So your ability to keep on learning, growing yourself, and gaining new skills all the time is going to be really important. So adaptability and the ability to change as and when you need to is going to be a core skill of the labor force in the future.
It's funny you say that. That's exactly why the teachers recommended art. Because I said that's what it teaches a person to do or to be, is to express themselves and to, I suppose, think out the box. And because there's no real boundaries to the whole thing. You can paint anything or you can write anything kind of thing. So I just, it was funny. And so my daughter didn't choose ultimately to do art. Okay, she didn't want to. She chose the more mathematical based subjects. But as I listened to them, I was like, you're making sense, but you're not agreeing with my bias. So it's quite difficult to take on. Anyway, so you're going to go through that. I wish you all the very best. But it is quite a challenge, I can assure you of that, because everything we've learned for so long suddenly doesn't seem to apply. It's incredible.
Yeah, and kids are different today in terms of their outlook and just, what they focus on at their age versus when we were at that age. So yeah, it's going to be very, very interesting years ahead for me with my kids as well.
For sure. Avi, thank you so much for joining us and sharing with the audience your journey, and we wish you and Effectus Capital Management all the very best. We need businesses like yours in South Africa for the future prosperity of our country. So we really do hope to see you and others flourish in that regard. So thanks again for sharing your experiences and knowledge with us.
Yeah, thank you, Leon. Really appreciate the opportunity to have this discussion with you.
All the best. Chat later. Cheers.
Bye.
Luvuyo gave his life to work beneath the ground. Years of hard work, sacrifice, all for a future he hoped would be easier. When the work was done, he went back home with only what he thought he had. But what he didn't know is that something was left behind, a benefit with his name on it. Until one day, a call came through. ICTS Tracing Services had found him and found what was his. Because what you're owed should never be forgotten. Now Luvuyo's dignity is restored. His story complete. ICTS Tracing Services, the benefit you never knew about.